Bitcoin, the world's first and most valuable cryptocurrency, has captured the imagination of millions, from small investors to large institutions. As we look toward 2026, the conversation around Bitcoin price prediction becomes more intense than ever. With evolving crypto market trends, blockchain innovation, and increasing institutional adoption, one big question dominates: how high can Bitcoin go? To begin, it's essential to understand the foundation of Bitcoin's price movement. Bitcoin, or BTC, operates on a decentralized blockchain network, meaning it isn't controlled by any government or financial institution. Its supply is limited to 21 million coins, which makes it a deflationary digital asset. This scarcity model is one of the major factors that drives Bitcoin's value over time. When Bitcoin first launched in 2009, it was worth less than 1 cent. Over the years, it has evolved from a niche experiment into a trillion-dollar market asset. Investors now see Bitcoin not just as a speculative tool, but as a store of value, often referred to as digital gold. Its scarcity, security, and independence from centralized authorities have made it a hedge against inflation and traditional market volatility. The halving effect and Bitcoin's historical cycles. To predict Bitcoin's price in 2026, we need to look at its halving cycle. Every 4 years, the reward miners receive for validating transactions is cut in half, reducing the rate at which new coins enter circulation. This built-in event, known as the Bitcoin halving, has historically led to significant bull runs. The next halving occurred in 2024, which means by 2026, the full effects should be in motion. Historically, Bitcoin's price tends to rise dramatically within 12 to 24 months after a halving due to the supply-demand imbalance. With reduced supply and growing global interest, analysts expect a potential price surge as investors compete for fewer available coins. Historically speaking, after each halving, Bitcoin has experienced exponential growth. Institutional adoption and global acceptance. Institutional investors are playing a massive role in shaping Bitcoin's future. Companies like MicroStrategy, Tesla, and major hedge funds have begun adding Bitcoin to their balance sheets. The introduction of Bitcoin ETFs has also made it easier for traditional investors to gain exposure without directly owning crypto wallets. This growing adoption is significant because it brings legitimacy and liquidity to the market. The more institutions adopt Bitcoin, the greater the demand, and, consequently, the higher the potential price. As governments begin to regulate crypto assets more clearly, institutional confidence continues to rise. Countries like El Salvador and several African nations are adopting Bitcoin as a legal tender or alternative currency. This global acceptance could further drive demand, especially in economies suffering from inflation or weak local currencies. By 2026, it is possible that Bitcoin will be used for everyday transactions in parts of the world where fiat money struggles to hold value. The role of regulation. Regulation plays a dual role in the cryptocurrency market. While it can create fear among investors, clear and transparent laws also foster confidence. Many experts believe that by 2026, crypto regulations will be more defined globally. This will reduce uncertainty and attract larger financial institutions that have previously been hesitant. With countries like the US, Canada, the UK, and parts of Asia now developing crypto-friendly policies, Bitcoin's path toward mainstream adoption becomes more realistic. If these policies continue to evolve in a balanced way, crypto adoption could skyrocket, boosting Bitcoin market capitalization significantly. Technological advancements and Lightning Network. Another critical factor in Bitcoin's future lies in technology. The Lightning Network, for instance, is a layer-to-solution built to make Bitcoin transactions faster and cheaper. It solves one of the biggest challenges Bitcoin faces: scalability. By 2026, as more exchanges, wallets, and merchants integrate Lightning payments, Bitcoin could become far more practical for day-to-day use. This evolution from a store of value to a medium of exchange could fuel massive global adoption. Furthermore, improvements in blockchain scalability and security enhancements will strengthen Bitcoin's reputation as a leading digital currency. Bitcoin versus macroeconomic factors. To understand Bitcoin price predictions, we must also analyze the macroeconomic environment. Rising inflation, currency devaluation, and growing debt levels across major economies have led many investors to turn toward alternative assets. Bitcoin, as a decentralized asset, is not tied to any nation's monetary policy, making it an attractive hedge during uncertain times. As fiat currencies weaken, Bitcoin demand could surge. If global inflation persists into 2026, investors may treat Bitcoin as digital gold, a safe haven to protect their wealth. This is why many financial analysts compare Bitcoin to commodities like gold or oil when discussing future valuations. Price predictions and market forecasts now. Let's consider various Bitcoin price forecasts for 2026, according to several models. Bitcoin could range between $120,000 and $250,000, depending on adoption, regulation, and global macroeconomic conditions. Bullish analysts predict even higher targets. Some believe Bitcoin could touch $300,000 or more if institutions continue accumulating and retail adoption increases. This projection aligns with the stock-to-flow model, which uses scarcity to estimate future prices. Others take a more cautious approach, predicting Bitcoin will stabilize between $80,000 and $150,000 if global markets experience volatility. While predictions vary, most analysts agree that Bitcoin's long-term trajectory remains upward. Its limited supply, growing global interest, and technological progress all create a foundation for sustained value appreciation. The rise of alternative investments. Interestingly, Bitcoin's rise has influenced the growth of altcoins and DeFi platforms, but Bitcoin continues to hold dominance in the cryptocurrency market. While projects like Ethereum, Solana, and Cardano focus on decentralized finance and smart contracts, Bitcoin's focus on security and scarcity keeps it in a unique position as the digital reserve asset. By 2026, Bitcoin may coexist alongside other digital assets as part of a diversified investment ecosystem. Institutional investors are already creating portfolios that include Bitcoin, stablecoins, and emerging DeFi tokens, further legitimizing the entire market. Long-term outlook. Bitcoin as a global asset. If we fast forward to 2026, Bitcoin could become part of mainstream financial infrastructure. Payment processors, digital banks, and e-commerce platforms may integrate Bitcoin payments directly, allowing seamless transactions worldwide. As adoption spreads, its network value and liquidity will only strengthen. Some experts suggest that Bitcoin could evolve into a global reserve currency, similar to gold, not replacing fiat entirely, but existing as a digital hedge. This transformation could push Bitcoin's price into a phase of long-term stability after its next major rally. Investment strategy and risk awareness for new investors. It's important to remember that Bitcoin, while promising, remains volatile. Prices can fluctuate dramatically due to news, regulation, or market sentiment. Understanding the risks, performing proper research, and maintaining a long-term perspective are crucial. Diversification is also key. Even though Bitcoin is the most established cryptocurrency, other digital assets can complement it in a well-balanced portfolio. As 2026 approaches, investors should monitor on-chain metrics, adoption data, and institutional inflows to gauge where Bitcoin is heading. If you enjoyed this in-depth breakdown of Bitcoin's future and want to stay informed about the latest cryptocurrency insights, price predictions, and blockchain innovations, don't forget to like this video, subscribe to the channel, and turn on notifications. Stay educated, stay early, and keep your eyes on the future of digital money.